Well, Shauna, if you may remember, but back some time ago when we first started, we said that it would be a longer, deeper situation than most people thought because it was so easy to do it with Mexico and Canada, and we kept saying, "Hey, this is not the same thing. Bigger country, a lot more going on," and we felt like they would dig in, and that's what they're doing, and it's probably going to be a baseline situation where they back off and we back off, and then you stare at each other a while and you come back to the table and maybe keep going and going. And it's longer than people think it would be.
Ted, just looking at the market's reaction today, we've had the rhetoric ramping up every day, it seems like, between the two sides. What do you think is making investors most nervous today as to why we're seeing the Dow off over 400 points and the S&P off almost 2%?
Well, I think it's blamed on China, Shauna, but I think that there's other things going on. We basically got back up to where we were in October in the market. And then all of a sudden, if you look underneath, there's some economic things going on that are not quite as strong as they were. And I think that has people realizing that, maybe I don't want as much exposure as I thought I did. And so it doesn't surprise us that's happening because we've been fairly defensive, so we expected that.
Ted, we have the trade tensions like we've been talking about. U.S. economic data hasn't been maybe as strong as some were expecting. We just had the U.S. manufacturing number out this morning, diving to more than 9-year low. Why would investors want to participate in the markets right now or buy in when there's so much uncertainty?
Well, I think one of the things that gets left out on that is that we've had a lot of corporate buying in the last 3 or 4 months. Not that we agree with all of that, but that's what's held the market up to a very high degree. And I think people have gone along with that and just thought that was something else. But what's happening, in our opinion, is that they can't see what's really going on in the economy because you look at housing, for example, even with lower rates, it's still coming in a little softer. Autos, like you say, PMI, the whole thing. And so I think people are just starting to notice that, and they're looking at that and saying, maybe, just maybe, it's not as good as we thought it was.
Ted, do you think that the markets are still a little bit too optimistic that we will get some sort of favorable deal when it comes to China?
Well, I think they probably are. I think everybody at heart, in the beginning, they thought that we would have something that would go, and I think they've gotten disappointed, but they still think in the back of their mind that something will happen. But if you look at this thing in general, it's probably more than just China. You could probably get China fixed, and I'm not certain the market still would go to another high. I don't think that would fix the whole market right here.
All right, Ted Oakley, thanks for joining me today.
Thanks, Shauna.